Financials have been winners on both sides of the Atlantic this week on the prospect of higher interest rates after Fed Chair Janet Yellen signalled that the central bank could raise rates sooner than expected. To discuss the sector as a whole, I'm joined by David Buik of Panmure Gordon. Hello to you. Thank you for coming in. Yeah, very good morning to you. There's a lot to talk about with this sector, as we know. So let's just start with that one, because we have had the financials gaining significantly. Is that all to do with Janet Yellen, or is there more to this?
I think there's more to it than that.
Yeah.
The UK banks have actually been behind the curve, because with the prospect of Donald Trump coming to become president, if you recall, between I think it was the beginning of November and January, most of the large US banks, i.e. JP Morgan, Goldman, everyone except Morgan Stanley, Wells Fargo, Bank of America, Citibank, all added about 20 to 25% in value on the prospect of the Dodd-Frank rules being weakened,
yeah,
which I'll be surprised if they get through Congress on that, but still nonetheless that's what he wants to do. And with also the prospect, as you so rightly say, of Janet Yellen possibly putting in 2 interest rate hikes in 2017. One could actually even be next month, I think. And that's very much on the cards. In our own case, we've been suffering from horrendous indigestion, call for the Rennies. Why? Well, this next week is going to be really fascinating, because what you're going to see, I think, is a total outcome of over 5 years since the banking crisis, really. £56 billion worth of fines, PPI payments, litigation, all the. Let's hope it's at an end. Also, in the same period of time, you're going to see £36 billion worth of loan write-offs. So, not that bank balance sheets will ever be completely clean, because if they are, they're not doing their job properly. But we hope that all those horror stories of those PPIs and those mis-selling of mortgage-backed securities and money laundering, which you'll never get on top of completely, but you'll hope that that large part of it is behind. Against that fact, you're not going to get in the UK the hike in interest rates that you're going to get in the United States. Okay, we're talking inflation 2.7% by the end of the year, and you're quite right to say 2.7%, quarter percent interest rates doesn't work, and you're right. But there is the problem also of the, how can I put it, the political machinations over Brexit, that people are not quite certain how things are going to work out. Mark Carney, I think, and the MPC will be extremely reluctant to put interest rates up until he's absolutely convinced that growth is there, that wage inflations are there, because if inflation goes off to 2.7%, and then you've got wage inflation at, say, 2.6%, that means there'd be less disposable income to go into the retail market. Now, as you and I know, 70% of retail represents 70% of growth. So if the growth stops, and people haven't got enough money to spend on the same things, retail comes down, unemployment goes up, growth comes down.
In terms of banks leaving the UK, that's a huge topic on the agenda at the moment. And it seems like a lot of them are setting themselves to go back abroad, to Ireland, to France, to Germany.
I'm completely against the run.
Right.
I'm in the minority, and I'm absolutely determined it isn't going to happen. And I can't just make a profound statement.
Isn't it already happening?
No. I can't make a profound statement without actually backing it up. So let me tell you where I think it is.
Okay.
Do I actually think that the passporting situation is an issue? Yes, I do. Do I actually think that the likes of JP Morgan, Goldman, HSBC, Morgan Stanley, Deutsche Bank, UBS, Credit Suisse have not sent a few people around Europe, a few hundred people? Of course they have, because it would be stupid not to. But are you going to look at me straight in the face and tell me, after 70 years of infrastructure in the City of London, whereby if you go back to the 60s, which was not that long after the war, you had a great stream of IPOs, then you had the Eurodollar market rampant in London. By the end of the 70s, there were over 300 trading banks in London. Then you had the most important thing that ever happened to this country in terms of the financial sector, which was the abolition of exchange controls. 1980, I'll never forget it as long as I live. It's the most important thing. Big Bang was a nothing by comparison. It, of course, changed the face of financial services. And here we are, the centre of the time zone, with English the international language of the world. And you're going to tell me, or anybody else is going to tell me, that a Mickey Mouse town like Frankfurt, which is a lovely place, and I think Germany's done a fantastic job industrially, can challenge the United Kingdom of Great Britain and Northern Ireland in their own backyard within a decade, I don't believe you. Not possible. France has got a tax problem. Do you really want to go to France and pay bundles more tax?
Well, France might be leaving the EU anyway.
Correct. So might Holland. It's not a done deal with Greece. Schulz could easily beat Merkel in October.
Yeah.
We have some imponderables here. So all this, Jack the Lad stuff, telling me what we can do and what we can't do. What we must be in the United Kingdom is humble.
If you are invested in the financial industry just now, what should you be looking out for? What should be your top points on the agenda?
Opportunity and growth. So basically, I am more bullish about American banks going forward because of the opportunities for growth over there are much greater. Because if you think about not only the fact of higher interest rates, which Yellen has already suggested, but if you also, in the same breath, consider the prospects of the repatriation of billions of dollars if they cut the corporation tax down from 35% to 15% over a 2-year period. A lot of that stuff, well, there's no point keeping it in Liechtenstein or where it is, so we'll put it home. My one fear, Katie, is that could go into shareholders' pockets rather than the blue-collar worker. I think if Trump remains president of the United States, it will go to the blue-collar worker very largely. And that means growth, and that means I think the banks will do particularly well. We have got a draconian regulatory system here, which is understandable, and you need double the amount of capital to do the same amount of business a bank than you did 8 years ago. So that makes the growth of them, as shall I put all my shares into Barclays, Royal Bank, not Royal Bank, obviously, but or HSBC, I don't know. So, the challenger banks around the place, like the Aldermores and the Shawbrooks and these other people, they've got a great chance of making a stand in terms of being able to provide loans for small and medium-sized enterprises. They're never going to take the high street on. But I think you're going to find banking is more diverse. We mustn't think about banking in the City of London as being about the big five. It's about international banks. And that's why I think, we have very tough controls over here. Completely understandable. And because a lot of people lost a lot of money, a lot of people lost their jobs, and you don't want any replication of that.
Yeah, and the scars are still there today.
Yeah.
David Buik, thank you very much indeed from
Pleasure.
Panmure Gordon, talking about the financial industry both here and in America today.